Overnight, Elon has sent a memo out or an email to all staff today regarding the layoffs. He says, over the years, we have grown rapidly with multiple factories scaling around the globe. With this rapid growth, there has been certain duplication of roles and job functions in certain areas. As we prepare the company for this next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increased productivity. As part of this effort, we have done a thorough review of the organization and made the difficult decision to reduce our headcount by more than 10% globally. There's nothing I hate more, but it must be done. This will enable us to be lean and innovative and hungry for the next growth phase cycle. I would like to thank everyone who's departing Tesla for their hard work over the years. I'm deeply grateful for your many contributions to our mission, and we wish you well in your future opportunities. It is very difficult to say goodbye. For those remaining, I would like to thank you in advance for the difficult job that remains ahead. We're developing some of the most revolutionary technologies in auto, energy, and artificial intelligence. As we prepare the company for the next phase of growth, your resolve will make a huge difference in getting us there. Thanks, Elon. Okay, there's a bunch of stuff I can say about this. I could probably do a half an hour on this. This is absolutely something that Tesla has done almost once per year. They missed a couple of years, but over and over again, they take these 10% discounts. I believe it is part of the Elon Musk philosophy. I've talked about it in previous books. This is a great idea. Once a year to chop 10%. You're looking for your worst 10%. The folks that are not redeemable. You've tried everything you know how to do. And so many companies are reluctant to get rid of these folks. But it is a very, very good way to manage a company because especially if you're in this massive growth phase, you're going to make some bad hires. It doesn't mean they're bad people. It just means they're not really the right person for the job. They may not be right for your company. They just may not fit into the culture, especially because the culture at Tesla is very different, very unique from cultures elsewhere. And by laying these people off, he gives them an opportunity to go someplace where they will fit better. I did this over and over and over again in my companies. My exit interview always included, hey, we think you're wonderful. It's just not a good fit here, and you'll undoubtedly do better in some other position. Anyway, last year when he did this 10% cut, he got tremendous congratulations. He was a leader. He was showing the way, and tech followed. You might remember Meta almost immediately a couple of weeks later followed, and their stock went up like crazy because they were following in the leadership of the number one entrepreneur of our age. Do you remember all those headlines? Okay. So I don't know. This year, the stock's down a little bit. I'm not 100% sure that the stock being down a couple of points this morning has anything to do with these layoffs. You could imagine, and there are some headlines this morning suggesting, well, these layoffs are just another indication that, Tesla has demand problems and whatnot. I don't think that's the case. And I think the markets will eventually get this right. But again, there are other things going on. For instance, also hurting the stock this morning, but again, an extremely minor blip is that, in fact, in this particular case, for other companies, if this happened, it wouldn't even make a single headline. But there has been a 7-day halt. Apparently, this is a kind of a rumor that seems to have good strength, or I wouldn't report it. A 7-day halt in production of Cybertrucks due to some issues needing correction. It appears to be a problem with the pedal, actually the accelerator pedal sticking, and that they've had more than, way too many complaints about this happening and have actually had some kind of a halt in production because of it. On the very, very positive side, the Times of India is reporting that Elon Musk has inked a strategic deal with Tara in India for semiconductor chips. Apparently, they are a top producer of very high quality semiconductor chips. And of course, as Elon is looking towards India has talked about India as being maybe the most important story out there right now in terms of emerging markets. It's not surprising that he's looking for a supplier in India, as well as Reuters is reporting that Tesla is scouting for showrooms in India. More indications as Elon is supposed to be going this week or next into India for 2 days to maybe make the final announcement of a roughly $2 billion investment in India in a gigafactory. And then we have this from the limiting factor. He's a very conservative reporter, so this excitement is kind of unusual for him. He says, I started looking into the 48-volt ether loop for the robotaxi today, for the robotaxi. All right. This is the ether loop. So in other words, once you're you may remember that on the Cybertruck, you've got not just a 48-volt system, but you also have Tesla going to Ethernet for a lot of the other connections, which just completely changes everything about the weight, about the cost, about the complexity of the entire electrical and electronic system in the car. He says, if my thinking is correct, they only, and so this is about the Cybertruck. I mean, I'm sorry, not the Cybertruck, the robotaxi. He says, if my thinking is correct, they only gave us the very tip of the iceberg at Investor Day, and the wiring system in that vehicle will be a revolution. The Cybertruck was a necessary test bed. It would have been far too much to eliminate all the cross wires and the 12-volt system all in one step. The robotaxi will be the biggest leap in design for manufacturing that they've ever taken. Lots of R&D required to get it straight. Holy mackerel. See, that's kind of a big statement coming from the limiting factor. I mean, Jordan is not one to overstate. So this will be interesting to see what all that means, and maybe we'll find out later this year. All right. By the way, hi, I'm Randy Kirk. If you're new to the channel, great to have you aboard. If you've been here for a long time, thank you for supporting the channel in so many different ways. Listen, tomorrow morning, the show is going to be late, maybe even as late as 8 o'clock California time, because I'm going to be on a Spaces with Trueflation at exactly 6:30 California time, so exactly showtime here. And why am I going to be on this Spaces? Well, they're going to be talking. I look at Trueflation as an outstanding opportunity. I've been talking about Trueflation for, I don't know, at least 10 or 11, maybe 12 months. I've been talking about Trueflation on this channel and talking about the amazing way that we get day-to-day updates on the inflation situation. But for instance, right now, they're showing inflation at 1.79, and the CPI is showing it at, well over 3. So why do we have this disconnect? What is it that Trueflation is doing wrong? Or what is it that the CPI continues to do wrong? Or how is it that Trueflation can't use their information to estimate the CPI better? I got a whole bunch of questions. That's what I want to talk to them about tomorrow morning. I also have recommendations for how the app could be way better set up in terms of reporting on a daily basis. If you're going to have daily reporting, have some daily reporting. Anyway, I'll be talking about all those things on that Spaces tomorrow morning. Love to have you join me on that Spaces. Maybe you'll have some commentary as well. We'll find out what that looks like tomorrow. I am putting the link in the description below for that event. Now, as usual, on Mondays, Brian White will be joining me later today, and Larry Goldberg also. We're having to really figure out how to work with Larry while he's in the south of France with the time difference and everything. But we have, I think, got an idea of how to do it. So anyway, with any luck at all, Larry Goldberg will be joining me as part of the Good News Monday program. All right. Sawyer Merritt says this morning, let's see, did I mention join Patreon? And that information is in the description below. When you go down there to get the information about Spaces for tomorrow, you can also join Patreon at the same time. All right. Sawyer Merritt saying this morning, Tesla has lowered its inventory discounts. Okay, let me repeat that. Tesla has lowered its inventory discounts. I had to read it twice this morning. I had to go, whoa, what? What are you talking about? They've lowered their current inventory discounts for Model Y in the US by up to thousands of dollars. As a result, Model Y inventory prices for all trims in the USA are now an average of 7.8% more expensive. Well, that's pretty significant. Of course, this would show strength. This would show that their inventory in the United States is getting into balance if they are able to raise the prices of the inventory in the United States. Anyway, that's, okay. So something else I'm highly recommend that you check out. Oh my gosh, this is such a great piece. The personalities on this particular show are not as crazy and wild as Sandy Monroe, but this is a quality teardown. This is a quality way of showing it. It's unbelievable. This is a Autoline again, showing another conversation they've had with CareSoft, and unbelievable. You got to see this video, and I'm going to put that link down in the description as well. All right, this is from CNBC this morning. So why is the market up this morning? Well, there's a couple of reasons. Obviously, the market's very happy that things are calm in Iran versus Israel. We've got a bunch of stuff going on this morning that is helping the markets. But so one of those is Goldman Sachs popped up more than 3% in the pre-market after beating Wall Street's expectation on both lines, top and bottom line this morning. That follows several bank reports on Friday, where JP Morgan, they dropped 6% because of concerns whether they would be able to generate enough income from lending as in the year ahead. But they were much happier with the Goldman Sachs report. Also, they were sad that retail sales increased 0.7% for the month of March, providing the latest indication that consumption remains strong in spite of inflationary pressures. This cannot continue. Can I say that again? It's not possible for consumers to continue to buy at this rate. The fact that they're buying this much now could mean that we look at a much lower spending rate later, because eventually they're going to run out of money. That pace was higher than the 0.3%. You think 0.7% is higher? I think I would have written this slightly different, CNBC. That pace was more than double the 0.3% consensus forecast that economists who had been polled. Excluding auto-related receipts, retail sales jumped 1.1%, also well ahead of the 0.5% increase that was expected. Now, unless these end up being revised, this would mean that auto sales are not up, probably. I mean, I don't know the percentages, so I can't make this absolute statement, but let's just say auto sales, retail auto sales were not up. In fact, they were probably, or if they were up like, 0.1. They didn't give us that number. What they did say was that increases in gas prices helped push the headline retail sales number higher. Yeah, with sales up 2.1% on the month. So you don't think that people bought 2.1% more gas, right? No, it's because the prices were up so much. However, the biggest growth area for the month was actually on online sales, up 2.7%, where miscellaneous retailers saw an increase of 2.1%. It's massive, crazy, unsustainable. Multiple categories did report declines in sales. So again, listen to this. These are all declines, even though overall it was up. They didn't show us the categories that were up, except those two. Sporting goods, hobbies, musical instruments, books, all reported a 1.8% decrease. Clothing stores were off 1.6%. Electronics and appliances saw a 1.2% decrease. What was up? Okay, so anyway, stock market futures added to gains following the report, while Treasury yields also pushed sharply higher. That was true. Going to check that out in a minute. The upbeat outlook for Wall Street came despite an escalation about Middle East tensions. Yeah, but the Middle East tensions were actually reduced. I'm sure that the market is up somewhat as a result of a relief. That had already started in the pre-market last night. Resilient consumer spending has helped keep the economy afloat despite higher interest rates and concerns about stubborn inflation. Consumer spending accounts for nearly 70%, as we know, of all domestic spending. Monday's data comes with market concerns elevated over the path of monetary policy. Federal Reserve has been expressed caution about cutting interest rates while inflation pressures continue. And obviously, this kind of retail spending is going to do that. With this kind of retail spending, we would expect to see inventories off. So we'll see what happens with inventories as they get reported later this month. Stronger consumer spending can cause the Fed to hold off longer on cuts, said Andrew Hunter, Deputy Chief U.S. Economist at Capital Economics. Markets are having trouble figuring out what to do this morning. Happiness over the calm in the Israel-Iran thing. Higher retail than expected. That should be good news, kind of. Bond yields extremely high up, but at least earlier. So was the market. Let's see what's happening now. All right. Tesla is now getting slammed. Not 100% sure why. They should not be getting slammed over that cut in their body count. That should be a positive, but they're now down $5.62. Apple also down $1.85. The rest of the Magnificent Seven are all up nicely. NVIDIA, for instance, up 21. The Dow Jones is up 337 this morning. NASDAQ up 107. S&P up 40. Tesla, I think what's happening is this is a momentum situation on Tesla where there's already some negative feelings, and these cuts seemed negative out of the box. I'm not sure if I don't know. I don't know how to call this right now. I'm not going to call it because you can't always be inside the head of the average investor out there. Okay, let's look at the Cathie Woods. Cathie Woods are all down, but not by much. They're just very, very marginally down. A couple of them actually marginally up, but it's all really, really close to even this morning. Again, I'm suggesting maybe part of the Tesla number being down could be this jump in bond rate. So percentage-wise, we have the Dow up 0.89. We've got the NASDAQ up 0.64. We've got the S&P up 0.79 and Tesla down 3.26%. All right, now let's look at the bonds. They are, oh, well, this is better than it was. So this is improving. They were down, the 10-year, oh no, it's still, okay, never mind. Forget everything I just said. Okay, the 10-year is up 12.7 basis points this morning to 4.626. We have got the 2-year up 9.2 basis points and the 2-month up only 0.008 percentage point. Basis points. 4.6 to 5.3. That is by far the smallest. 5.4. That is under. It's only about 80 basis points now separating the 2-month and the 10-year. That is by far the smallest inversion we've seen. Once again, and this is a case of the 10-year catching up to the 2-month, not the 2-month falling to equal the 10-year. So that is interesting in and of itself this morning. May not hold, but it's been a trend with the 2-month getting closer and closer in terms of the inversion. Okay, we have the oil prices down just a little bit this morning. Brent is back under 90. We've got Texas Intermediate under 85, down 85 cents this morning. Natural gas down 2.66, reversing the trend. Last week, natural gas is back down to $1.72. You've got the gold market down a little bit, down $7 this morning, but still sitting at 23.66. You've got copper, however, continuing up. A lot of people talking about silver. And then copper up also 1.7 to 4.33. I have not had a chance to look into that more deeply. I apologize. I will do that. We have got the dollar steady this morning with the yen at a 34-year low. And we have got Bitcoin up 1736, but still it's way down after the crash yesterday around the time of the Iranian-Israel problem. Bitcoin this morning at 65.9, call it 66. You've got that's it. I've now explained it all except going back to Tesla to see if it is still around the same. Yeah, still around the same. Listen, I want to remind you again, Trueflation tomorrow morning. So that means this show will be later, maybe even as late as 8 o'clock California time. The Trueflation is at 6:30 California time, 9:30 Eastern. So if you want to be part of that, the information is down below in the description as to where you can find that spaces. Last night's Monday morning program, I do on Sunday night, I do the Monday morning show. Lots of excellent, not because I'm great. No, this is stuff that I found around the internet I thought was really, really, really super useful. You may want to go take a look at that. I will put the card right here. And of course, Larry White later today. And Brian White, later this morning. And somehow we're going to get Larry Goldberg on air We're going to work that out. So we're having a struggle, but we're going to find a way. All right, that's all I got for you right now. Hopefully Tesla turns around in time for Good News Monday. It's been great talking to you.